Good morning, Fractal Effects team. Before we get started, please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. We'll jump onto the charts in a minute. So everything is bullish today. We've had a double break to the upside, but we're right inside of a 4-hour fair value gap. So usually after a double break in the direction of your bias, what we want to see is the market come down, sweep out the lows, and come back either down to a blue zone or a 15-minute fair value gap, whichever is in the way. Here, however, we had a break, a push down to the 15-minute fair value gap, and then a push back up. So the double break happened here. So we'd like to see it at least sweep out the previous lows and really dig into this 15-minute fair value gap before heading up. But now we have a 4-hour fair value gap right above us. There's the midpoint, the consequence encroachment of it. I thought as soon as we got that double break, I was hoping it would come back down into this 15-minute and taking it from here. But that did not happen. It just kept going up. So now we have a 4-hour fair value gap, which could push it down. And we have this 15-minute fair value gap, which could push it up. And our blue zone's all the way down here. So the fact that we hit this 4-hour fair value gap could give us a deep retracement to the blue zone before it goes up. But I'm only looking for buys today. And if we tap the midpoint here and cut into this, there's a daily fair value gap here as well. So if we cut into this, then I'll consider this more or less a runaway market. Might give us an entry, but for the most part, it's already cut deep into the areas I was looking at. My original goal, this is the markup that I had. I wanted to get in here with my stop loss down here. I wanted to go into this. Now we have still 17 minutes before the spotlight dealing range is fully formed. So until then, I'm still using the blue zone strategy. And I'm using US 500 as my divergence. Same thing with here. We didn't have a double break as of yet on US 500. We just had a clean push. So if it's still one leg, that means we could still break down because that's the manipulation move. But we have a buy model. We're green across the board here, 1, 5, and 15. We're above the EMAs. I just don't like the fact that we have not taken out the lows here. So when you get that double break, I don't always expect it to come down to the blue zone. I would like it. But as mentioned before, if the blue zone is far away and you have a 15M fair value gap in between the blue zone and your double break, and you see the rejection happening, and then on the 1M fair value gap, you create a fair value gap. Remember, hit a fair value gap, create a fair value gap. If you see all that happening, you can actually take it from there. Here we got none of that. We just barely tapped this 15M fair value gap. And we did not sweep out these lows after our double break. So it could just be a runaway. And in case of a runaway, I always wait for spotlight confirmation, retracement, extension, because that increases our odds. I have a lot of fair value gaps here marked up, so just bear with me. Just want to see something here, the 1M. Back up. Remember, stick to your rules. This is where people start getting FOMO. They think they're going to miss the ride here. But let's take a look at what we really have. We have an upside expansion model, we have a buy model, and we have a double break. That means the dealers reveal their hand. That means this thing is bullish and we want to go up and we're only looking for a buy. But remember, it's only a buy model until it's not. It's only a sell model until it's not. That means once it's delivered and or hit a higher time frame PD array. What are PD arrays? They show up in the form of liquidity or inefficiencies. So if we swept previous day's high, or if we've hit a higher time frame fair value gap, which we just did, this purple fair value gap represents the 4-hour fair value gap, and then right under it, that yellow one is the daily fair value gap. So you got to proceed with caution here. Now our rule is once you get that double break, even though the dealer does reveal their hand, you want to make sure that before you get in, it has to first come back down, sweep out liquidity, and tap a fair value gap before it goes back up. Otherwise, it's a runaway market. You don't want to chase a runaway market. That's why we're proceeding with caution. Now that we're only 10 minutes away from the spotlight strategy forming, the dealing range being fully formed, I'm just going to wait for that. I'm going to wait for a confirmation, retracement, and then extension. I still expect it to retrace down here. This is the area of interest. I want to see it sweep out these lows, hit this fair value gap into the, hit the consequence encroachment, really dig into it, and then push up. Now, if it leaves without us, it leaves without us. That's okay. We don't chase, we stalk. There's a difference. And we're using US 500 as divergence. We have not yet had a double break, but we look like we could be getting close to a double break. So this is the high. Now if we take out this previous candle low, and then this high again, that's our double break. Then both of these markets are working together and in alignment. Yeah, as soon as we got that double break right here, I had already set this up. I was stalking it, waiting for the market to come back down to here. I would have gladly taken that buy right into the consequence encroachment of this 4 hour, and that would have gave me a 3.5. But sometimes it doesn't go your way. But this is where I expect it to come back down to. I want to see it take out these lows, tap this 15M fair value gap. It might not get all the way down to the blue zone, just because we're well above the EMAs. And if it doesn't do that and it's just a runaway, that's fine. So US 500 did not take out the low of the previous candle. So even if this breaks the high, this is all still one continuous leg. Remember what a double break is. You take out the high and the low of the previous 5M candle. That's a double break. That yellow line there represents previous day's high, I believe. Just going to confirm real quick. Yeah, that spike right there. Now, if you were watching the news yesterday, a lot of analysts were saying that this spike, that one bullish run that we had yesterday, was due to some rumor coming from the White House that the tariffs might be delayed 30 days, or no, 90 days, I believe. That had nothing to do with a rumor. That was all part of the algorithm. They just used the rumor as the reason. Remember, they use news as a smokescreen to reprice. But the algorithm's going to do what it's going to do. How do we know? Because yesterday, we can go over it. We posted it actually on our Instagram. So on our Instagram and our TikTok, yesterday's move. And it went according to plan. It followed the rules of our strategy exactly. So it had nothing to do with a rumor. It's just the way the algorithm works. And if you know how to read the algorithm and decipher it, you can catch those waves. Whole lot of bullish action right now, but I'm not satisfied. Not until these lows are taken. And even after these lows are taken, I want to see that pattern set up properly. Then it has to prove to me that it actually wants to go back up, because now that it stopped just short of previous day high. Look at that. And just short of this 4 hour consequence encroachment. That's a good sign. The market doesn't just stop short of liquidity and inefficiencies. It doesn't do that. It does it to trick you, but that's another one of those reveals. And if this was poker, that's a tell. We would love it if the market pushed down from here now. So US 500 now swept out previous day's low. Previous candle's low, 5M. About 5 minutes for the dealing range to be fully formed. So still bullish. And now we've taken previous day's high and we've tapped that consequence encroachment. So right now this market is extremely bullish. These were my targets, as you can see here. I wanted to get in down here. The target's up here. Might come back down here later in the afternoon. Right around the time the purple zone starts to form. That's around 1:30. Remember, there's a move around 1:30 as well that you can always catch. When the market's too heavy this way in one direction, then at 1:30 I always like to wait for it to kind of come back and then take the first presented fair value gap after 1:30. that's in the direction of our bias, targeting the highs and lows set during the morning session. We go over that in the Learning Hub, of course. But yeah, this might be the pullback here. Let's see, did we really sweep previous day's high, or do we just tap it again? So our range is fully formed now. At 10:30, we tap it. Let's see, we might just get our confirmation here, but again, there's no fair value gaps left in here. That's another reason I want to sweep these lows first. When there's no 5M fair value gap, and you usually want to run the lows. Now, since these lows technically fall within the range, for the spotlight strategy, remember we don't want to break both sides. That's a false day. What we would like to do is take these lows, tap this midpoint, close within the range, and still get a bullish confirmation. Otherwise, as mentioned before, we are sitting in a 4-hour fair value gap with a daily fair value gap above us. So it could reverse here. US 500 actually has a better setup right now. There's your New York fair value gap. So it did create a 5M fair value gap. It hasn't fully broken the highs twice. We don't have a double break yet. There's your 20 EMA. Could be heading up here to take out this liquidity. So just got to be patient and watch. Yeah, there are no footholds right here. No 5M fair value gaps created. And no early retracement. Another reason why I'd like to see it run these lows. And this would have been a great, again, this would have been a great trade right here. Upside expansion model, buy model, double break. This candle let us down. As soon as we had that double break, I was hoping that this candle would come all the way down, tap the midpoint, and then I would have taken that entry right here. So just short of that. But again, I didn't get FOMO. I didn't see this break again and then jump in. US 500 just short of the New York fair value gap there, the opening gap. And this would have been a quick move too. If it had just gone down lower, it would have been out in 30 minutes. Anything under 30 minutes is a nice clean move. Guess we can get rid of this now. We'll see. We'll see if it comes back down here. Market, excuse me, when the market seizes up like this, we get a lot of consolidation. Again, they're engineering new liquidity. There's people going short from this 4-hour fair value gap. There's people that are looking to go long still. Still haven't had a double break on US 500. Yeah, I'm still not interested. When there's this much resistance, I want to see a deeper retracement first. And this is where you want to watch that divergence. If we sweep out these lows, but US 500 can't get above this fair value gap. This is the only fair value gap, by the way, that's been created. This is the only NYC fair value gap. There is none. There's none here. So if we sweep out these lows and the market stalls here, then that will be a good indication that it actually wants to push up. But not that this can't come and sweep out the lows either. But the reaction would still have to be off of this fair value gap to see if it wants to go back up. Hopefully this is the push down now. So we're coming back down to the NYC fair value gap, 20 EMA. Still no confirmation. Let's get rid of this. See if we get some reaction off of here. And then for NAS, I want to see it dig really deep into this, sweep out these lows. Now it might not. When I see a double break, that's my goal. My goal is to take liquidity and then hit either the blue zone or a 15-minute fair value gap, whatever's in between. Get rid of all this stuff in between here. This is no longer of interest. US 500 just cut through that New York fair value gap. 29 seconds left. Let's see if it closes below, if it violates it, or if it stays above it. Bouncing off the 20 EMA as well. I'd like to see it sweep these lows and close inside our dealing range. You want both these strategies to line up. So even though the blue zone strategy is still a buy and still bullish, you want the spotlight strategy to also give you a bullish confirmation. You want all that confluence heading in the right direction. So we closed below the New York Fair Value Gap. Let's see what this next candle does. We've created a 5M, or we're on the verge of creating a 5M bearish fair value gap. Remember, still no double break here. This is all still one manipulation leg. So it could use this 5M fair value gap to just push down. And that's how you use the blue zone strategy, like the divergence of the blue zone strategy. US 500, NAS, you get a break, manipulation break on one and not the other. You want to use that in confluence with what's going on. You get a double break on one and not the other. You want to use that. So right now we have a double break on NAS, but no double break here. Three minutes left. Until we get a bearish confirmation from the spotlight strategy, I am still bullish. One minute, 52 seconds left. Looks like we are going to continue down, maybe down to the 50 EMA, which is great because that's heading right into the zone of interest. Remember, the blue zone's right down here. If you're wondering what this, I just mark up the 15-minute fair value gaps. I want to make sure they're matched up with our blue zone as well. So there's another 15-minute fair value gap and our blue zone down here. And an hourly fair value gap, I believe. So it could come right through, which then would give us a bearish confirmation. Now you want to use these both in alignment with each other. So now we're leaving all these fair value gaps to the downside. US 500 heading towards that 50 50 EMA. So with a double break, as mentioned, you want to see it sweep liquidity. It actually engineered new liquidity here and then swept it. So while we were waiting for it to come all the way down here, it actually created its own liquidity here and then swept it. So we could see some reaction off this 20 EMA, but I want to see more confluence than that because there was no fair value gap left here. Usually we want to pair up the 20 EMA with a fair value gap. But the only fair value gaps that have been created are bearish ones, right here and here. Little slivers. And I'd rather just still wait for confirmation. About 7 minutes left till 11 o'clock. US 500 heading down to that 50 EMA now. Still driving down. Now keep in mind, this is a good sign unless we get a bearish confirmation. We do not want to get a bearish confirmation. We just ideally want to sweep these lows, tap the midpoint here, and close within the range and give us our 1M fair value gap. That's what we'd like to see. If it keeps dropping all the way down and we get a bearish confirmation and hit the blue, we're most likely still going to go up, but remember, we're not going to go against our confirmation. That means the day is getting trickier and muddier. You don't want the waters muddied. You don't want it to drop all the way down here, even though it could. Still coming down, heading towards that 50 now. Now it's starting to get a little interesting. If we can just avoid getting a bearish confirmation and bounce off this zone, that would be good. If we continue pushing down, we get that bearish confirmation. And this is where keep in mind, nobody's ever 100% free of the conflictions. I don't want to call it FOMO, but you do feel conflicted at times. And that's what happens when you have two strategies that both are powerful, both are accurate, but when they're not working together, it's better to sit it out, even if you know what's going to happen. Like I said, even if we push past this and get a bearish confirmation, I still think we're going to bounce off the blue zone, because that's what the blue zone strategy says. Blue zone strategy says you get a double break, come back down, either sweep liquidity 15-minute or blue zone, and then it's heading back up. But if we get that bearish confirmation, now statistics are against us. That means there's an 80% chance that the top of this will not break. Even though today might be that 20%, and I'm still confident that it will go up, I have to abide by my rules. That's not FOMO, that's confliction. I'm conflicted at times between two strategies that I know are both highly accurate. But when they don't work together, you just got to bend a knee. US 500 getting close to taking out those lows. There's the blue zone right down there. Same thing. But again, if we get a bearish confirmation and we bounce off the blue zone and still head up, technically, I personally will not be taking that. I'm not interested in taking a trade where the statistics have dropped. I want both of these strategies working together. We want to see these lows swept, but the market stay inside our dealing range. We do not want to get a bearish confirmation. Same thing here. I want to see these lows swept. This was the move I was waiting for this morning. But I do not want a bearish confirmation, and I do not want any candle to close below this fair value gap here, this 15M fair value gap. Let's wait and see. 10 seconds from 11 o'clock. US 500, ready to take that low. Did it wick it? Yeah, so it took those lows. This is the area we want to see if does it close inside or does it continue down to the blue zone. Three minutes, 41 seconds left in this candle. Remember, you don't get to this close. Just like here, you don't get that close. Without something happening, you don't get this close. I still want to see it come down, hit this. US 500 has taken those lows, swept those lows, but NAS has not. But remember, NAS has already given us a double break, whereas US 500 has not. This was all one clean leg. Oh, sorry, this was all one clean leg after the break. About 28 minutes left. Let's see if we get that confirmation in either direction. Just got to remain patient here. We're just going to bounce off that 20 EMA push down here. Remember, I'm not looking for a sell yet. Even if we get a bearish confirmation, I'm not looking for a sell today. I'm just going to avoid this market then altogether. I want to sweep these lows, tap this, close in here, get a bullish confirmation. That's what I'm looking for. That's how I know these two strategies are working in confluence with each other. Question is, how deep do we dig here? Do we go even further? Do we dig into this? Same thing with US 500. Will we come all the way down to the blue zone? And if so, can we avoid getting a bearish confirmation? I still think the bigger move is to the upside, but let's see what happens. So what we're waiting for is this low to be swept and a reaction off of this area, this 15M fair value gap. And all of that without getting a bearish confirmation. That's what we're hoping to get. That will mean that we're still in contention. Now, I've known people that are, as soon as they see that double break, they blindly jump in. And on a day like today, they would have rode this. They would have got some out of it, but that's not the strategy. The strategy, as soon as you get a double break, you pull back, sweep previous lows, and either hit the blue zone or a 15M fair value gap if it's in between, and then you got to see your setup happening there. So I'm confident that this will at least come back and sweep these lows and hit the midpoint here. And as mentioned before, even if I'm confident, I'm not taking this sell. That's not the move. I'm here. This is where we're stalking the market. It's coming to us. I'm not chasing it. This is where I want to see it. There's a reason why this strategy is 80% accurate. You know what the hardest thing to do is? To make a person's brain 80% accurate. It's better to just let a robot trade this then. Because your emotions get in the way. That's where that 80% slips. People want to chase the market. They want to get FOMO, anxiety, fear. All of these emotions are hitting you all at once, and you do something ridiculous. But no, I do not want to take this sell. I'm stalking it here. I know it's going to come back to here, so I can then take it up. That is how the strategy works. That is our algorithm. Double break, sweep, blue zone, or 15M fair value gap. Now let's see if it just stops here, or if it goes all the way down to the blue zone. This is, again, the stronger point. The market is drawn to it, attracted to it. But if it does this, we will most likely get a bearish confirmation. And then I do not want to trade that. Now, some people might even say, well, when you get a bearish confirmation and you know it's going to be attracted to the blue zone, can't you take that sell? No, there's no 1 to 3 in here. Where's the 1 to 3? This is all one leg. My stop loss would have to be all the way up here, equal relative highs. Now keep in mind, now that we're running the spotlight strategy, I'm waiting for a confirmation. I'm just telling you what I want to see. If I get a bearish confirmation, I'm out. If we get a bullish confirmation, then we'll look for the setup. But this late in the game, we might not get that bullish confirmation, even if we're pushing up. But at least we can do the ticker tape reading and let you know exactly what's happening here, which way the market's going. I wouldn't be able to call this market if there wasn't an algorithm. If this was all dependent upon buying and selling pressure, then I would not be able to figure out these entries. There would be no point in having a strategy then. Then everybody could just do support and resistance and nothing else. There you go. We got our bearish confirmation. That's what I didn't want to see. We will most likely get the same here. That means we're probably pushing down to the blue zone here. But I'm not interested in that sell since I was only looking for a buy today. Upside expansion model, buy model. But we'll continue to watch this. We still got about, is it 19 minutes left? Just to show you how the algorithm works. Drawn to that blue zone. Remember, today is also a Tuesday. On Tuesday, if we're bullish, the market usually sets the low for the week. If we're bearish, it usually sets the high for the week. It's a 70% chance that the high will be set or the low will be set on Tuesdays. definitely did not set the low. That was yesterday. Lows all the way down there. Got 2 minutes, 32 seconds left. It's going to deliver right into this red zone. One minute, 44 seconds left. And again, we will most likely get a bearish confirmation, head down to the blue zone. But I'm not interested in looking for a buy from the blue zone. Simple as that. So even though I know it's going to bounce off this zone or here, if we get that bearish confirmation, we are not allowed to. It's no different than a sniper sitting in a pillbox and he's calling in, I have the shot, I have a clear shot. So you got to wait for the general, you got to wait for the commander, you got to wait for some orders to come back through that you have the confirmation to take that shot. As soon as we get that bearish confirmation, we don't have that authorization anymore to take that shot. Because that means, statistically speaking, there's only a 20% chance that we're going to take out these highs, sorry. And there you go. Was that a coincidence that it came back exactly to the area I was looking at? Or do you guys see why this strategy is 80% accurate? But that's how we increase our odds. That's how we increase our probability of getting it correct. We want both of these strategies. Both of these strategies are 80% accurate. Now, doesn't it make sense that you want both of them heading in the direction of your bias? That almost guarantees that you're going to get at least a high probability trade setup. So we did get that bearish confirmation. We have swept out these lows. We have hit these targets. Now let's see if it wants to continue down lower or if it wants to actually head up from here. But since we got that bearish confirmation, again, I'm not looking for a sell. And I'm not looking for a buy anymore. So we're just doing ticker tape reading for the next 15 minutes. I want to see if it comes all the way down to the blue zone, which the US 500 looks like it is heading to. And if the US 500 is, then NAS might be as well. But I'm sure it's all a coincidence, right? So that's reached our blue zone. Now let's see if we get reaction off of it and actually push up. Now that we have this confirmation, we could create a 5M fair value gap here, create that, or tap that, and then push down, but we might even just get a runaway right into the blue zone like US 500 did. "12 minutes left. What we'd want to see here, if we hadn't got a bearish confirmation, we'd want to see a bounce off the blue zone, a 5M bullish fair value gap created, tapped, 1M fair value gap created, tapped to take out these highs. But now that we have a, again, bearish confirmation, I'm just not interested. We're just going to watch this for the next 10 minutes. Looks like we're getting some reaction off of here. So even though this, even though the NAS has not hit the blue zone, the fact that the US 500 has, it could push up from here, pulling NAS with it. Let's see if it creates that 5M fair value gap. Pushes up from here. Eight minutes left in our stream. Again, divergence. It's not a coincidence that we're getting the same reaction off the blue zone on the US 500 as we are off the 15M fair value gap on NAS. It's reacting as if it was a blue zone. Still waiting for a 5M fair value gap. Let's see if it actually gets created though. Seven minutes left. And if we push down and we hit this fair value gap, that would be like this, hitting that blue, darker blue fair value gap down there. This is one of those days after the dust clears, come back and take a look at it. Was the bearish confirmation correct? Or was the blue strategy correct? Did it bounce off the blue zone and head up? Which means for the time being that the bearish confirmation was correct. So you did have a retracement, an extension, even though it was a short extension. If we take a look at the standard deviation, let's see if it falls within one standard deviation. Where's the one standard deviation? It's 0.5, 1.5. So one standard deviation is right inside the blue zone. There it is. We've already taken out that low. So technically, today, there's an opportunity for both of them to be correct. Bearish confirmation, retracement, extension to one standard deviation, bounce off the blue zone, take out the highs. But you don't want that. You don't want a day like that where it's muddy. That's what I mean by muddying the waters. I don't want to take a sell only to take a buy. I want to only do one move. I want both these strategies heading in the same direction, and I want that confluence. About 4 minutes left in our stream. Please make sure you check us out on fractaleffects.com. We've actually put together an incredible package for you guys now. We've dropped the rates. There's extra things that have been added. We've partnered with a third-party signal service called Market Sentinel. They're doing their own thing, but you have access to it if you'd like. As soon as you sign up with us, you have access to Market Watch. You even get $15 off your TradingView plan. You can see it all at the bottom of Fractal Effects in the package. You can sign up for the TradingView whether or not you sign up for our package or not. That's just our referral code. You can get a discount directly. Check us out on Instagram, fractal.effects, where we're always uploading some educational material constantly, daily, going over moves on days where we're not even live. We'll be live again, obviously, tomorrow. About 3 minutes left. Let's follow this last candle. Looks like it does want to dig deeper. I'm sure it is heading to the blue zone, 1 standard deviation. Forty seconds left. And that's our time. So again, we'll see you guys tomorrow. Come back, check this out. Most likely we're going to hit that blue zone, and we'll get reaction off of that, probably going into the afternoon session for another bullish run.